Howdy, this is David Groce, your Texas Tax and Lawman. Let's continue our real estate series, Big Hat, Big Cattle, by talking about installment sales. Installment sale sounds more like I'm buying a washer or dryer at the rent-a-center. But in real estate terms, an installment sale is what you call the sale of a property over time with a regular note payments that include principal and interest. When I started practicing law, Texas allowed contracts for deed, which specified that a tenant could move into a house, pay a monthly payment for a specified period of time, and then at the end, the house would be theirs. However, if the tenant was late or defaulted, the tenant took nothing. This was a great deal for people with no credit and no down payment. While this helped some people, too many landlords abused the tenants and found a way to take the house back in the 8th or 9th year of the contract, and the tenant got nothing for their money. So the law changed. And now landlords can offer loyal renters or prospective buyers the ability to buy the house with a note in deed of trust, just like from a mortgage company. In this situation, the landlord sells the house to the buyer, secured by a mortgage and a deed of trust, which specifies the purchase price, interest rate, and term of years. The buyer then makes payments to the seller on that note, and the buyer takes over all the ownership responsibilities of the house. The buyer pays the taxes, insurance, maintenance, and upkeep. The seller then becomes the bank and gets paid a mortgage payment every month. If the buyer defaults on the payment, the seller has to give the tenant notice and retake the property through the foreclosure process, which gives the buyer time and opportunity to cure the default. If the buyer cannot cure, like getting the proper insurance coverage or making required payments, the seller retakes the property. From the seller side, this is a good strategy where you have a faithful buyer who can make the payments but cannot obtain financing on their own. The seller usually charges above market interest to account for the tenant's bad credit and then collects the payments monthly. From the seller side, each payment includes principal and interest. This has two tax effects. First, the interest is taxable to the seller. Second, only the capital gain portion of the principal payment is taxable. Let's look at how we calculate that. Suppose the seller buys a $100,000 house. He rents it for several years and then finds a tenant who really wants to buy the house and offers to pay $150,000. They agree to the sale and to charge interest at 8% on a 15-year note. This sale generates two types of income: long-term capital gain and interest income. For capital gain, the owner will pay tax on the percentage of the gain. Remember, he bought the house for $100 and sold it for $150. Therefore, he has a gain of $50,000. $50,000 divided by $150 is a gain of 33%. That means in each principal payment over the term of the note, the owner has a capital gain of 33%. At the same time, the other 67% of the payment is return of principal and not taxable to the seller. So, using our amortization chart, the tenant makes regular monthly payments of $1,433. For the first year, he pays a total of $15,768. $5,396 of that is interest, and the seller pays regular income tax on the interest. The remainder, $10,371, is payment of principal, and only 1/3, or $3,422, is taxable as capital gain. The other 2/3, or $6,949, is not taxable, but return of capital. For lots of sellers, this gives them a steady flow of income over time that is secured by real estate that is insured against loss. If you have the right buyer and need help doing an installment sale, give us a call. We regularly help clients draw up these agreements and report their taxes on their installment sales. Until next time, adios. Texas Tax and Lawman Legal Disclaimer. Hey, I'm a lawyer. You know I have to have some lawyer mumbo jumbo. This is a general information video. not client-attorney privilege information. The content is informational only and is not directed to any specific facts or circumstances and cannot be relied upon as a legal opinion, even though that would be nice and save you a trip to the lawyer. If you have a specific legal question, feel free to contact David Groce directly or seek qualified legal or tax counsel in your state of residence, state of mind, or whatever place you call home.